Hello and welcome everyone to Managing Tax-Exempt Sales 101. My name is Regina and I'll be your host for today's webinar. Today we'll be covering why exemption certificates are a necessary part of any tax-exempt transaction, the anatomy of an exemption certificate and what's needed to maintain, validate, and store one, common exemption certificate mistakes and how to correct them, and tactics to help you fulfill your overall tax obligations as an exempt seller. Before we dive in, I have a few housekeeping items. Just a friendly reminder that Avalara cannot provide legal tax advice, but will answer as best we can. On your screen is our safe harbor policy. Please take a moment to review while I continue with some additional housekeeping. We're recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be customized. Feel free to move or resize the windows. Slides can be resized by dragging the bottom corner or by downloading the PDF slide deck under Additional Resources. The Additional Resources section contains related resources, including the slide deck, and there are several ways to engage with presenters and attendees today. If you have any questions, please submit them using the Ask a Question box. We'll try to save time at the end for Q&A. You may also submit troubleshooting questions there in that Q&A box, and we will try to help you. You can join our attendee chat by clicking on the icon at the bottom of your screen with the two chat bubbles, and the attendee chat will appear. We encourage you to introduce yourself, network, and discuss today's topic. You can react to the presentation by clicking on the emoji icons. We're offering 1 CPE credit for today's presentation. For those looking to receive credit today, please note that we'll ask you to respond to 3 of our 4 poll questions. The poll question will pop up on your screen for a limited amount of time, so please be sure you're ready to answer when the question appears. Please do not split or tile the screens on your computer, as this can affect the placement of the poll question. The webinar platform may not render correctly on mobile, so please try to watch from a desktop. You must also attend the full 50-minute duration in order to be eligible for CPE credit. Once you've met these requirements, your certificate will be available to download in the Earn Certification box on your screen. Click the icon to access it, and it will open up in a new tab. Your certificate will also be sent in a post-event email. Unfortunately, we're unable to provide credit to those who have technology issues that prevent them from qualifying. If you do experience an issue, please reach out as soon as possible so we can document that. If you have a moment, please respond to the survey questions on your screen following the webinar. All right, let's meet our presenters. Matthew McNeil is the Director of Technical Consulting at Avalara. Matthew, please tell us a little bit about yourself.
I've been with Avalara for more than a decade. I've been playing in the exemption certificate management space for roughly 25 years. So lots of experience around these type of documents. I've done the programming technical side. I've done the tax research side. Hopefully we can answer a lot of your questions today, get you up and ready to go on sales tax exemptions.
All right, thank you. And we have Andrew Quirk, and he is the product sales specialist at Avalara. Andrew, can you tell us a little bit about yourself?
Thanks, Regina. Absolutely. Been at Avalara 11 years. I've had a few roles in that time. Current role as a specialist. I work with our exemption certificate management tool all day, every day, and I make sure it aligns to our customers and prospects' business needs. So talk to thousands and thousands of businesses over the years, helping them identify needs and aligning our solutions to solve those problems, specifically around collecting, validating, and maintaining those exemption certificates from their exempt customers.
All right, thank you. Let's take a look at the agenda for today. We have compliance landscape for tax-exempt sales, 4 common compliance challenges for tax-exempt sellers, best practices for getting and staying compliant, and then, of course, Q&A. That is all I have for housekeeping today, so I will turn it over to our presenters to get us started.
Okay, let's jump right into this. First thing we're going to do is just give you an overview of tax exempt landscape. And what does it mean for something to be tax exempt? How do we document that? Now, tax exempt sales kind of break out into two different categories. You might have a buyer that is exempt because of the way they are using the goods. You might have a customer that is just an exempt organization. They're just naturally exempt for all things. When it comes to sales tax transactions, though, every state has different rules around it, different ways of looking at it. Kind of the good news on this front, every state has the right to create their own form, but Avalara, along with other companies, have been trying to force states down the path of utilizing pretty much the same form, kind of unifying the regulations. So we'll see, out of all the forms, the two most common are the streamline sales tax form or the multi-state tax commission form. Very standard, easy to fill out forms. So what we're doing is to make sure people are collecting the right forms and documenting everything. This is what I was saying with businesses being exempt or the goods being exempt. You have to understand what the process is. There are going to be different forms in some situations. Sometimes it'll be the same form for that state, for that customer, depending on what they're doing. They just need to fill it out a little bit differently. So just understand that basic. The core concept behind sales tax is the end user should be paying sales tax. It's not like VAT. In European, Asian countries, VAT means that value-added tax, it's every time it's passed from one person to the next, there's a little bit more tax added onto it. So when it gets to the final consumer, it includes all the taxes along the way. US does it very differently and says, all right, you got a component manufacturer, they sell to a parts manufacturer, they sell to a car manufacturer, on through that process. And they're presenting exemption certificates saying, hey, I'm not the end user of this. And because of that, we don't need to collect sales tax. We're collecting those exemption certificates. It's not until the very end of the process where somebody is buying it for their own use that we need to deal with that taxable transaction, collect the sales tax, remit that sales tax to the state. There's going to be additional things that impact this. We'll talk about some of these things later on, such as Nexus and kind of the Wayfair decisions and things like that have come into make this just a little more complicated. You would think that every transaction is either taxable or exempt, but again, we have to deal with, are you registered in that state? Do you have the right to collect sales tax? Or does that customer have the ability to provide an exemption certificate within that state? So couple tricky things there, but overall, this is a great graphic to show almost all along the way in manufacturing, it's exempt until it hits that final buyer. All right. Go into our first polling question here.
All right, thank you so much. So as a reminder for our poll questions, you do need to answer 3 of the 4 and watch at least 50 minutes of today's presentation to qualify for CPE credit. Okay, so how confident are you in your understanding of what you need to do each day to get and stay compliant? You can answer on your screen now, and I'm going to move us to our results so our speakers can, oh, wow, look at that. I'm going to turn it over to our speakers now.
Yeah, this is something that we see a lot of people feel pretty good about what we're doing in the tax department, but it's always nice to just get some additional training here or there to make sure that you're up to speed on some of the smaller nuances of what needs to get done. If you have no idea about sales tax, this is a great place to start. But I think once we get into it, we'll see most people are in that somewhat confident area. they know what they're doing, but again, nice to know just a little bit more. All right, Andrew, we're going to pass it on over to you to take kind of the next section here.
Absolutely. Appreciate that, Matt. Excuse me. So we're just going to cover some things that we're seeing as current challenges. And Matt touched on it earlier, but Nexus is something that has been around in the sales tax landscape for a while, and it still exists. So meaning you have Nexus in a state. When I started at Avalara 11 years ago, it was all based on physical presence. Then in 2018, obviously, we had the Supreme Court case where South Dakota came in and took Wayfair, and it turned into economic nexus. So it didn't matter where your brick and mortar was or your salespeople. It came down to where you're doing business to. So you're obligated as a seller to fulfill the statutory requirements of that taxing jurisdiction where the state or generally the sales tax takes place. And, in the digital area and the online markets and B2B e-commerce, that's all changed. And the challenge of it with economic nexus is, of course, every state's different. There is, dollar amount requirements. Some states have transaction amount requirements. So it's just a big challenge that comes into play now. And it's beyond just registering in the states. The more you're registered in, the more states you have to collect and remit in. And of course, the more states you have to collect exemption certificates in. So the more states you file in, the more states you charge tax in, the more states you have to collect certificates as well. So if you're selling nationwide, whether you have physical presence there or not, you're required now through economic nexus to collect and remit in those states, and also collect, validate, and maintain your certificates in those states as well. This is breaking down to, those thresholds I represented in regards to every state's different. And you can see that in the graphic. The thresholds are generally low, as you can see in the graphic, $100,000 dollars in sales or 200 transactions to B&B. So just some things to consider. And then this is where we...
Oh, go ahead, Andrew.
This is what we wanted
to... one of the things, though, is that economic threshold can change over time. It's based on the current government in that state and what they believe is the accurate threshold. So that's something you need to monitor. You don't need to check on it every day, every month. Once a year, sit down and just see, have any of those thresholds changed and if it would impact your company. One of the nice things about the Avalara software, if you're using the transaction tax calculator, keeping track of your transactions will keep a chart up to date of where you stand on your closeness to that threshold. Do you need to register in those states you're not registered in?
Yeah, and I love this graphic too, Matt, because this is economic nexus states that include exempt sales and go off gross sales. You can see it's almost every state included goes off exempt sales. For example, in California, non-taxable sales, such as sales for resale, are included. Exempt services are not included in the threshold, but every state's different. And we have the tools and the resources to give you guidance there. There's all kinds of free content around this, within Avalara's product suite, but also online and whatnot. But as you can see, every state's different.
That the ability to include or exclude exempt sales is something really critical to understand. I've dealt with so many manufacturing companies, and they always come back with, I don't need to register. Everything I'm selling is tax exempt. It's all component part. Well, in majority of states, you're seeing those component parts add up to that number. Yes, you may have to register, but the nice thing is, even when you register, you're filing $0 sales tax returns if everything is exempt, but they still want to know and they want to monitor your exempt transactions, which means when it comes to a time for an audit, they're not going to audit you based on your returns or sales tax. They're going to audit you based on exemption certificates. If you say everything's exempt, you're going to have to show 100% compliance on exemption certificates.
Absolutely, Matt. And I hear all the time in businesses we work with, you're not going to get audited next week on the sales you did in June. You're going to get audited next week on the sales you did 5 years ago, right? So if you don't have solutions in place to, monitor and manage this, it makes it really hard and a lot more manual, takes a lot of time up, and, we want to help you reduce risk. So this is an example similar to what I talked about, but, ways economic nexus has affected customers whose sales were primarily exempt. And I'll just speak to this example here. A manufacturer in New York went from being compliant with less than 75 certificates on file. They had to prove to that their sales, were to other OEMs and other, resellers, other dealers, which was, 99% untaxed or managed correctly. And then, but if you're, a nationwide wholesaler, you use drop shipments, you went from needing only 500 certificates to more than 5,000. So 75 certificates. Now the economic nexus, you might need 2,000. 500 certificates with economic nexus, you might need 5,000. Just an example of the impact this had on businesses that sell tax exempt now that they're required to register everywhere. So why is it so difficult? Many reasons. Not only is there, 40 plus states that have their own requirements. The forms vary and differ by state, depending on who your exempt customer are. Are they a reseller? Are they a nonprofit? So on and so forth. Within the same state, a resale certificate for a specific state is going to be different than their nonprofit certificate. So it's challenging. And depending on who internally at your team, is responsible for the collection, the validation, and maintaining, employees find it difficult to collect them because it adds friction to the sales process. You don't want to slow down the sales. You're trying to make this, getting the sale more important than staying compliant. So it requires that you properly collect and manage, have a process in place. And if you have employees that aren't trained to validate certificates, it can really make you inefficient and have no process to reduce the risk if you don't have or empower them with the ability to collect, know they're validating, and then, I've said maintain a few times. The maintenance of it is probably the most important, because to the audit story earlier, 5 years from now when you get audited, to Matt's point, you're going to get audited against who you're not charging tax to. And can you prove that you have the certificate on file for that Illinois reseller that was current in 2022? That's the risk you're trying to avoid. What happens when you get audited? Are you able to find that certificate in a previous, filing period?
Yeah, I will talk in just a moment on the customer side of it. The burden is on you to collect the right document that's been filled out correctly from a customer. I mean, you don't have control over your customers to that level. You can't stand over them and say, fill this out exactly how I need it filled out. So,
a bad or missing certificate is worth way more than no certificate at all. We're talking about a piece of paper, but can it be tens and thousands of dollars of audit defense and audit risk on, what you didn't collect correctly.
Yeah. All right, let's move on to the second polling question. Regina,
right.
You want to go over it?
Yeah, as a quick reminder, you do need to answer 3 of the 4 polling questions and attend at least 15 minutes of today's presentation. I know there was a little bit of uncertainty as to whether some of your answers were being recorded for the last poll question. I did take a look. It looks like answers are coming through and being recorded on our end. So if you feel that you should have earned certification at the end and you don't see it there, or it hasn't been emailed to you, please feel free to respond to our post-event email, and I'll take a look and award that to you manually. That's not a big deal on our end. Thank you for your patience with that. Occasionally, there's a little glitch. All right, on to the second polling question. So, what is the biggest challenge your team faces when, excuse me, I'm so sorry. What is the biggest challenge your team faces when collecting exemption certificates? All right, now we're on the screen where you can answer. Sorry, I had to go back to the slide before because there was something covering it on my screen. I couldn't see
Regina,
that.
maybe wait a second before we go to the next slide. So that I think when we forwarded the last time, we only had a few responses. So maybe just wait here a second.
Sure. Yeah. This should stay on screens for 1 minute. It's
Perfect.
set for 1 minute. Yeah. So everyone has plenty of time to answer. Give everyone a little bit more time, and then we'll take a look at the results as they're coming in.
And you should be answering, on the screen. I see some answers coming in the Q&A and the chat. So we want you to answer right within the application here, not in the chat section.
Yeah, and on your screen, what you're seeing on your screen right now is what you click on. Our first slide is sort of an introductory slide to each poll question. And then what pops up here with the white background is what you click on to record your. All right, so looks like we have some coming in. So I'll pass it back to our presenters to talk a little bit about what they're seeing.
Yay, we're getting results. Not 1,000% of one thing.
Yeah,
yes,
I think last time we went too early, but yeah, this is more accurate of what we normally see. When we typically host these webinars, Matt and I, we don't usually get, I feel, 100% compliant. So that was kind of surprising earlier, but yeah, I mean, this is accurate. I mean, it is a challenge in collecting certificates, in getting them up front, in making sure they're accurate, so on and so forth. So it's very common for us to see these wide range of answers.
Yeah, I just want to talk about the fourth one down, D, training staff to handle certificate collection accurately. 20 to 30 years ago when I was out there, collecting exemption certificates was purely just a tax department function. And it has moved away from tax department. They're now doing other things. It's now moved to, in most cases, being the controller, under the controller being credit manager, who's in charge of invoicing, credit checks. And these are people that may be accountants, but they're not really up to speed on what makes an exemption certificate valid or not. So that's something, training the staff is normally good, where we sit down maybe once a year. For example, a large distributor I work with had roughly 200 people in their credit department that were invoicing all around the United States. And so what we do is we do a quick once a year meeting where we go over, hey, what has changed in tax law? What do you need to be aware of? Keep it to 15 minutes or so in the middle of their huge training class. But it's definitely something that needs to be thought about. How do you train your own internal staff on what's right and what's wrong? And that kind of leads us into the next section of the customer experience. Remember, we're trying to keep the customers happy, but we also have to keep the state happy on what we're collecting. So when we look at these issues, there's a couple of different things we need to look at of, how hard do we push customers to provide the stuff we're looking for? You can see some of the problems here. If you issue an invoice and it's taxable, and the customer says, no, I should be tax exempt, they're not going to pay that invoice quickly. And really, you're running a business. The goal is make a product, invoice them, get them to pay as quickly as possible. Getting that in the credit world, it's that DSO standard. We want to get that as low as possible, meaning we want to get our money in our hands as quickly as possible. So getting them to pay because we've got our invoicing accurate is always great. Getting an invoice accurate means getting an exemption certificate from them. Have they filled out all the sections they need to fill out? Have they filled out the correct form? I saw somebody posted in the question area here, hey, I'm working with customers in Alabama and Florida. I got an MTC form, but Alabama and Florida expire every year. Do I need to collect a new one from them? Well, yes, you do. In certain states, you need to look at their account every single year. Alabama and Florida both expire at the end of the calendar year. So what you need to be doing is contacting those customers on a recurring basis to say, all right, it's end of year. I need a new certificate, or going into January, you will be taxable. So just know that there's a couple of different things here. Keeping customer happy is a key thing. Again, happy customers normally pay quicker. Keep that communication level open. If they have questions about why do I need to fill this out, how do I fill this out, something that can be answered by your staff is great. We would normally provide a cheat sheet for our credit team saying, if people ask, what do they need to do? How do they fill it out? We say, well, you're going to have to refer you to your own internal accounting team to decide what's the best way to fill this out. But if you don't fill it out correctly, we will have to charge you tax. So keeping customers happy keeps that billing process flowing properly. And then talking about billing, we're into selling. Pass this back to you, Andrew, to cover the aspect of selling to the customers.
Absolutely. Thanks, Matt. Kind of referenced this earlier. 10 years ago, the B2B transaction or the sale was typically, old school invoice, PO number, place an order on phone. So it's changed over the years, especially since the Wayfair decision in 2018. So, businesses are selling B2B was an on-prem process to online, right? So you're going to have your end customers want to purchase in more than one way. So an omni-channel way in selling to them. You're giving them the ability to purchase online, right? Do you have a B2C component that's online? Do you want to add the B2B component online as well? Do you have a order management system? Do you have a login page where your customers come, log in, register, so on and so forth? So you want to give them the ability to purchase more than the traditional way. And this is what we see happening now. It's not just B2C consumers online right now. We're expanding the traditional distribution and sales channel. And, you might see this from all those components on how we used to go to market are all different now, where, you might have a marketplace part of your business that's all involved. So it's just important to be able to have the ability to collect these certificates in more than one fashion, if you will.
Yeah, let me just add in that you've got all those different channels. You want that process to be the same across as many channels as you can. Get your customers used to filling it out. Make sure those channels talk with each other. You might have somebody that buys from you in online capacity, later on goes into a brick and mortar store and says, well, I bought online. I normally buy tax exempt. Why am I getting charged tax here? Having those systems talk to each other so we know customers are exempt no matter where they go and they fill out the same form no matter how they do it is always great.
Yeah, look at these results that we had in 2023, which is a year and a half old now. But B2B digital sales, to my point earlier, has grown 17%. This again was a year and a half ago. B2B e-commerce is the most effective sales channel. It's the quickest. You can see the numbers there. And what we found a couple of years ago is 2/3 of buyers in 2022 opted for remote human interactions or digital self-service for ordering and reordering, right? So that's just the trend we're seeing. And these numbers continue to rise. They're only going to keep getting more and more, as time goes on, and we live in the digital world. And I love this one, is 70% of decision makers are prepared to spend up to $500,000 on a single e-commerce transaction. So just think about that for a minute, right? Of course, POs, invoicing will always exist, but the decision maker and the buyer is just becoming more and more comfortable from doing this online and e-commerce. And again, what that plays into is doing it and be able to buy, exempt as well in the point of sale, in the shopping cart, so on and so forth. And to Matt's point, this needs to be replicated, in your ERP, in e-commerce. You need to have the same flow. And if you can do this in one system, collect across all channels, it gives you the ability to collect these certificates from your end customer in the shopping cart, in the My Account page that I messaged. So within Avalara solution, you have the back-end tool where you can collect, validate, and maintain the certificate, but then you get just as well a better front-end user experience. So you want to make that user experience for your customers, these businesses, when they're buying online, to give you the ability to easily give you a certificate in that buying experience, to easily give you the ability to see the certificates they may already have on file with you. Easy access to them so they can purchase easier and simpler. To Matt's point, you want to continue sales going. You don't want to slow down the sales process. And also, depending on, the volume of these sales transactions, maybe you don't want your internal teams to slow down the process, right? You want to give your buyers the ability to, and your customers, view and manage their own certificates in any sales channel that you have internally in your own business workflows. So then we talk about no sales tax. Well, customer service still matters. And there were some questions in the chat talking about that. Well, what do we do when we don't charge tax to the customer and 2 months later they come back to you? Well, that's all part of that process. You want to have a proper process in managing the certificate, whether it's in your onboarding. Get these certificates up front, build that into your workflow so you don't have to deal with negative customer experience going forward, like having to do credit and rebills. We want you to avoid that, and you should want to avoid that. Our typical recommendation on a best practice is you charge tax until you get a certificate prior to invoicing. That's what the states expect, right? So you just need to build that into your workflows because, yes, customers don't like to provide them, but you're on the hook for it, right? It's your responsibility to get the certificate up front. And then also, you shouldn't expect some of your employees, maybe your customer-facing teams that are in sales or service, that are just trying to get the sales to be the experts on that. They aren't the expert. And that's the absolute truth of the matter. Every business has sales tax compliance responsibilities, and you need to care about a flawless customer experience. Every business can be audited by states. I hear stories every day about the businesses we work with on the states that get audited, and this is a really big target for these auditors.
Yeah, speaking of audits, let's jump into that section. Thanks for tying this all together, Andrew. I just want to point out, I've never been an auditor, but I did marry a state auditor. So hanging out with her friends, I've learned an awful lot about some of the things that happen behind the scenes. Really, the states don't want to be auditing exemption certificates. They want everything as automated as possible. When they look at a lot of the other areas of tax, they can grab data, throw it into a report. When it comes to exemption certificates, they find themselves just going through paper after paper. And when they audit you for exemption certificates, it's normally not going to be a fun experience. When we look at what's going on with audits, let me just go back and tell some fun stories. Auditors go into a company and say, I'm going to focus on use tax. Let's look at everything you bought that you did not pay tax on. And did you present an exemption certificate? Or if you should have been taxed, did you say, I paid the proper use tax? And they kind of make it seem like they're auditing for use tax, but really they're looking for, all right, who is selling tax exempt? But then the company's saying, well, we had to do use tax. They never asked us for an exemption certificate, and we didn't do any paperwork there. So they're getting leads to go in and then say, all right, who is the seller? Let's go audit them for exemption certificates and see if they're collecting anything at all, see what states they're registered in, things like that. Auditors will normally come in and ask for a certain period of data. Normally goes back 4 years, but it can go back further. What we've seen them do is when we're looking at exemption certificates, again, they don't want to go through every single paper. They will say, all right, over a 4-year period, we're going to look at this month in particular and this year. Let's pick another month and another year. And they'll look at all the transactions that were exempt and say, show me all the certificates related to these transactions. They'll come up with a sample population and statistics around that and say, all right, of the 100 certificates, you presented 99, you're missing 1% of your certificates. You had a total gross sales that were exempt of X amount. 1% of it is an error rate. You owe us that much. And you see, most of the time, it's in that sampling population, you can see average cost of an audit of $114,000. All right, so part of that ties into penalties, interest. You didn't file on time. You filed incorrectly. Those are penalties. You'll have interest fees for not paying that money to the government in a timely manner. All that kind of adds up. The pain from an income tax point of view is state issued penalties and fees like that are not income tax exempt. You're in violation of the law. It's technically a crime. You can't deduct illegal items off your income tax return. So that would be kind of a below the line payment made. So just know
Matt,
that not a fun area. Yep.
Can I interject there too? You mentioned something called the error rate. So I was working with a business last month where working with a new controller. She was brand new, 6 months in. California came knocking, said, hey, we're going to do an audit for sales tax this time frame, right? 21, 22, and 23. Controller goes back to this auditor, the state, and says, listen, I'm brand new, 6 months in. I'm trying to get this all cleaned up. Come back. The auditor says, even better. What I'll do is I'll take the same error rate from the last time we audited you, which was like, the previous time, 2017-ish, around there. I'll take that error rate, apply it to the new audit period. So to Matt's point, they looked at 1 month, took that error rate from the last audit, applied it to the 1 month of sales, and then it took that 1 month and it times 36 months and applied it to the new audit period. And the controller says, all right, well, no promises. So California does the work, sends her a bill for $70K. So of course she's like, of course, I'm not going to just pay this, right? But that's what the auditors do. They're trying to make it easy. They're trying to get in and out. And it usually, to Matt's point, comes down to exemption certificates or use tax. And then one point that Matt didn't focus on is he married a state auditor, a Texas auditor who lived in Connecticut and audited New York City-based business. So just think about that, team. The states are very aggressive when it comes to auditing.
Yeah, she was the audit manager for the Northeast. She technically worked for the state of Texas, but lived in the Northeast, so she could drive around the Northeast and audit all the companies for what they were doing in Texas. They would look at those manufacturers in the Northeast and what penalties they got for not doing things properly in the middle of the country. Yeah, kind of a weird situation.
Yeah. It still exists today because I met a former New York auditor who was based in obviously New York City area, but she would do audits in California.
Yeah. The thing I love about audits is when I lived in sunny California, it seemed like it wasn't every summer, but almost, not every summer, winter, I would get audited by trying to remember which province. I think it was Nova Scotia would come and audit. And they were a fun bunch of guys, but they were desperate to get out of the Nova Scotia winter and come to sunny California for a few months.
Exactly. It was weather-based.
Yeah. They would audit us and a couple of other companies, but I kept in touch with them for a number of years. Good bunch of guys. Not all auditors are evil. So when we look at the audit process, part of it is just pulling all the paperwork, having to sit with auditors, explain things. Do you have all the right documents? You might think you have everything you need. You go into the meeting with them, they say, but I need this extra thing. And you got to go back and ask for it. The pain is dealing with customers that have gone out of business. You got to go get some notice from them saying, yeah, I really was tax exempt, or I was taking this and shipping it out of the country, whatever it was. But going back to those customers does take time, takes manpower to do that. One of the pieces that we mentioned is normally audits go back 4 years. So they'll come in, they'll say, all right, you're still in the current year, let's go the 4 prior years. If you're being audited on a regular basis, they will normally look at it and say, all right, you're good, I'll come back in 4 years and audit you again through this. But first time you get audited, this is one of the crazy things that I ran into. I was doing consulting for a company. They got audited by Maine, and they had been in business since 1960 something, but it was now 2010, 2011. It was their first time they'd been audited by Maine, and they had some problems. And so when the state sees you're not doing things right, they normally audit 4 years. But if they have issues, they have the right to extend it to prior years. And so they ended up auditing all the records from 1980 through 2010 because there were so many errors popping up. And most companies turn over ERP systems every 5 to 10 years. We don't have transaction records of what happened 20 years ago. It's impossible to find. So they had to just start making estimates, and those estimates are always going to be more favorable to the state. So just know, keeping track of these documents, knowing what your obligation is to retain them under audit is really important. Reasons for audit penalties, you'll see here. This is a good listing of what's going on. This chart is pretty nice. That top number, sales tax rate, or rule errors, that ties mostly to transactions, but the exemption piece is a pretty high number here. The other one is that failure to register at 33% is important. If you're not registered, you're not normally collecting exemption certificates. So it kind of ties to that missing exemption certificates. I think on this, when we say missing, it also includes you're missing the proper form or correct form. Errors in the form can also lead to problems and cause that audit risk. Sometimes having a document, whether it's filled out good or bad, is a great starting point for discussion, but the auditor will push harder and harder. And it just becomes your ability to defend, yes, this is the right document. It's been filled out to the state standards. So a lot of those discussions with an auditor, unfortunately, can get painful on what's right or wrong. At Avalara, we have links to the regulations within the software so you can see what does the regulation actually say that you need to collect, how do you need to collect it, what needs to be filled out. But you get auditors that are fresh out of college that are being thrown out in the field and say, I got to audit all these companies, do this, do that. They have their own method of doing an audit, which might not be in alignment with the regulations. So if somebody says this document isn't acceptable, it doesn't always mean that they're right and you're wrong. You need to look at it and understand, hey, I collected this in a timely manner. I've got the key elements that are required filled out. I'm good to go. So you got to be able to defend your actions, feel confident in what you're doing. And hopefully what we're doing is, that original poll question, how confident are you? We'll have a few people that feel very confident, but most people are that next tier down. They just want to know, all right, I feel good about most things, but there are some things that pop up I'd like to know a little bit more on. All right, let's go into the next polling question.
Okay, thanks, Matt. What is your
Yep.
biggest challenge managing exemption certificates? All right, you should be able to click one of these answers on your screen. If your screen is tiled or split, there's a chance that the poll questions are sliding in behind those tiles. So just double check that and give everyone another minute to answer before we start to take a look at the results. And this should stay on everyone's screen for just a little bit more. Okay, let's take a look at what's coming in.
Keeping data accurate and up to date is a great one. This ties back to what I was saying a long, long time ago in this session. Tax is no longer in charge. It's the credit managers. They've been told, hey, when you sign up a customer and they say they're exempt, let's get an exemption certificate. 4 years go by. Nobody's looked at that form. Again, somebody had asked about Florida and Alabama. They expire every year. Who's going out and collecting those? So that's something, if you've got people in your department that are being trained, hey, you're the regional manager for Florida, just know that every year you got to collect all those documents again and again and again. So keeping things up to date is really important.
And then organizing and retrieving too, like the second biggest responses. So that's obviously really big. If you have to collect it, you have to know where it is, and then if and when have the ability to maintain and retrieve.
Yeah. Step one for every client I talk with is when they get into collecting exemption certificates, they have an Excel file, maybe listing things. They have a shared drive where they're throwing all the images in. Key thing about that shared drive is, all right, somebody gives you a multi-state certificate. You just save everything in that folder, or do you organize it and say, all right, here's a folder for all my Florida, my Alabama, my Kentucky, my Texas. And you break it out into separate folders. Somebody gives you that multi-state. Do you save it once in every folder, or do you have a new folder for multi-state? And if it's a multi-state folder, how do I know what's on that certificate unless I go and open it up? How do you quickly grab things? And we've got some great tools at Avalara to help with that. But just know when you're thinking about storing everything, you got to put it in a certain order and make sure when an auditor comes along, you're not spending more time finding stuff than is really needed. All right, let's move on to some best practices. I know we're getting close to the top of the hour, so got a few more slides to go through. My main thing is when we start talking sales tax, everybody focuses on, all right, I've got to charge them tax and I've got to remit that tax to the state. There's a lot more to this, like Nexus, where should I be collecting that? Where should I be registered? Am I collecting the right data? Should I be reporting exempt sales or just taxable sales? Different divisions, how do they combine into that filing? There's a lot of stuff going on in the world of tax. So when we look at taxes, though, you got to understand what your business model is. Where should you be collecting tax? Where should you be collecting exemption certificates? Look across all the states in which you're shipping in and decide, all right, do I need to register in additional states? What do I need to do to register? And once I register, what's my obligation for filing? So when we look through the documents, setting up a game plan to manage those documents, we saw collecting, maintaining, updating them is a key component. And that's something where it just takes some time to document. All right, what are the states where we need new documents on a regular basis? I mentioned Alabama, Florida many times, but Illinois, every 3 years for resale. Pennsylvania, every 4 years. Idaho, Nevada, even the state of Washington. It's scattered. It depends on the state, depends on the type of form collected. It depends on why they're claiming an exemption. So a lot of variables in there, but just try and document as best you can for your team to say, all right, here's what I need to do and collect what I need to collect. And the final two pieces, calculating, that ties into, if you have an exemption certificate, make sure you're calculating no taxes. And then the reporting part, being able to collect all the data about what's taxable, what's exempt. You can see the exemption certificates are a key component of this, and that tax determination, which ultimately flows to the sales tax return. You'll have communications between your customer and your system, but really it should be a nice, clean flow. The better off you are on organizing this, keeping those communications in a very standardized process. Here's what we need, here's why we need it. If anybody asks, here's how we deal with it. And be able to get those exemption certificates in is just going to make that final piece of reporting to the government that much easier. Now, we deal at Avalara with a lot of automation. We want to take this process, turn it into something you can quickly and easily do. We have tools, we call it our exemption certificate manager software. We've got tools in there. You'll see here, we've got a free Nexus tool to help you understand where you should be registered, where you should be collecting exemption certificates. So just know, Avalara, we offer this webinar. We also have additional tools for you out there. Andrew, let's switch over to you for a second to talk about maintaining and such.
Thanks, Matt. Intelligent exemption certificate management. I mean, that's the whole point. That summarizes everything that we just covered the entire time. So again, you want to have one source of truth where you can collect, validate, and maintain your certificates, and where it talks to the Avalara tax engine. And that's exactly what our ECM tool does, exemption certificate management. In addition to that, it also talks to other tax engines, right? So just keep in mind that ECM can connect to the tax engine you may have right now, but I'm not going to read every bullet point on the slide there, but it just gives you an idea of what we've built into our tool to give you one source of truth, to use AI assisted validation that we built in to give you the ability to, manage your tax exempt customers, maintain the certificates, turn on features that allow you to automatically have the software proactively email your customers when you need a new certificate. So that's all built into our intelligent exemption certificate management tool. In addition to the software that's available to you in the systems, we also have services that are available. So you can engage our team to take that work off your plate. So just know that Avalara has services team that can help you validate the certificates, that can help you reach out to your customers. We even have a service that allows our managed services team to send postal mail letters campaigning for new certificates from your customers if you ever need that. So just know services are available. And ECM, like I said, it natively talks through Avalara. But depending on your ERP or your e-commerce site, you can have additional functionality there. And of course, once you own a subscription to our exemption certificate management tool, there are API integrations that developers can build for you to help you along that side as well. And we've talked about the customer side, but if your business ever makes exempt purchases, meaning you have to send your own certificates out to your vendors, just know that is part of our solution as well, where you can get your vendors in the system. You can set up the states where you're exempt in, the forms that you want to use, and have the system send those certificates out to your vendors. So you have one source of truth to track that as well. And the key here is you want to digitize your exemption certificates. As one of our colleagues says, that Matt and I know, you want to turn paper into pixels, right? So if you're still living in the world of an accordion file or a filing cabinet and storing these certificates in paper, it's time to digitize that. It's time to have an intelligent solution in place. And that's what Avalara's product suite can help you with, especially exemption certificate management solutions. And of course, part of that process is being accurate, reducing your risk, being efficient, and on top of that, providing investor customer satisfaction for your customers as you continue, to grow sales within your business. I think I'll pass this off to you, Matt, in the last few slides.
Yeah, we've seen a lot of people have implemented our software. They've been able to really save time, save money. We've got different reports that we've produced over the years. We are now working with third-party companies that are evaluating our customers and saying, what has the software done for you? So this is something that's nice to see, getting money back. Yes, the software is not free, but hopefully down the road, you can make your money back by shaving off expenses. Now, let's look at this.
I don't think we need to spend too much time on this one, Matt, but just kind of general things that you need to ask yourself, as you review your internal process. And obviously Avalara can partner with you in this.
Yeah, these are some good things to just look over and say, am I having issues anywhere? Let's go into the final polling question, make sure we get that taken care of.
Okay, would you like to talk with an expert about your global trade compliance? And you should be able to answer on the screen here. We'll leave this up for a minute and actually start to go into some of our questions. We have limited time remaining. We had a lot of content today, so let's see if we can get through some of the questions. I have a couple marked here that we want to answer. Yeah, please.
Yeah, I have one that I keep seeing come up over and over again. Michael G was saying, how should collection of exemption certificates work for drop ship customers? This is something we had talked for hours on. There's other people saying, how do we deal with customers that are not registered in that particular state? It all ties together. There are certain things that say, all right, if you're drop shipping on behalf of a customer, you don't know the end customer, you know the customer you're selling to. If they're not registered in that state, they can provide their home state certificate and a letter accompanying that saying, I am not registered in that state. Now, that's not going to cover all states. That would not work in California, Hawaii, but majority of states, that's where it is. But you should also look into this and say, all right, let's make a list of what states accept that kind of home state rule in those cases and which ones don't.
Okay, let's take a look at number 34 here. Okay, if we don't have nexus in a state, should we be collecting exemptions so that we can proactively prove that we didn't have retail sales?
Ooh, definitely a business decision. So if you know that you're going to go into those states at some point, you absolutely, and we see businesses do that all the time, collect them proactively in advance. But if you're not registered there, right? In theory, if you're not registered, you don't have to collect tax, so you don't have to exempt. But if you know you're going to be in that state, you absolutely should proactively, get ahead of the curve and collect them up front, in my experience.
Correct. The other thing is, if you know you're never going to register in that state, you're never going to have enough transactions to meet economic nexus, you probably should not be collecting certificates there. If you know you're never going to register, why collect? And if you are collecting, a state auditor finds out you are collecting, it leads them to believe you probably should be registered there and force you into registering. So there are some good things, some bad things. Again, consult your own internal legal team, tax team to find out what you should and should not be doing.
Okay, what if the customer only provides the certificate number and their W-9 without the certificate?
W-9s have no relevance on exemptions. In certain states, There used to be rules that said all you need is the number, but really, an exemption certificate is like a purchase order. It's an agreement between a buyer and a seller. So you really should have on there somewhere the buyer information, seller information, and something that says I'm exempt for this reason. If it's resale, here's my resale number. So that's kind of the thing I recommend. Most states have rules that say you need to have these certain data elements on a document for it to be an exemption certificate. Buyer, seller, tax ID number, reason for exemption.
Okay, I think we have time for one more. When the billing company is sales tax exempt, but the shipment is to a state where we have nexus, should sales tax be charged?
If you have to collect tax, absolutely. So you have to protect yourself there. So it's kind of, Matt touched on it earlier, depending on your exempt customer, some states will honor an out-of-state certificate, some won't. So there's complexity there that you need to do your due diligence on.
All right. That's all the time we have for today. Just a quick recap on CPE credits. If you qualified for credit today, you can download your certificate now in the CPE certificate engagement tool. It will also be available in a post-event email that you'll receive within the next 24 hours. And again, if you feel that you qualified, feel free to respond to that email and I will take a look for you. We will also include in that email a link back to today's console, as well as the on-demand recording, the slide deck, and additional resources. And just a quick note that Avalara's customer conference Crush is on tour. Check out events.avalara.com for more details. There are a couple of cities coming up in September. And that concludes today's webinar. Thank you so much for joining us. Hopefully we'll see you on the next one.